All right, hello, we are back. And we have another key lecture today. If for whatever reason you didn't see the lecture that was before this one, make sure that you either catch up by watching it online, or for you folks at home, if that was one of the ones you skipped, if you skipped any of them, and you shouldn't skip any of them, but if you did, go back and watch it. Again, some students watch it twice because it's such a key lecture. But this is kind of a continuation on of that lecture. So let's dive right in. One thing I do want to point out is I know that this lecture and last lecture, it seems like we are on the real minutia of accounting. Okay, you know, we'll go over the homework today, and everybody will be going debit, debit, credit, credit, debit, debit, credit, debit, and it seems kind of. This is the very, very basics of the very, very foundation. And I know it can get maybe a little dry or boring, or it just seems like, gee, man. But it's just kind of like sports. When you have a kid who is very young, and if you teach him the proper way to hold the bat and the proper way to stand in the batter's box and proper way to throw a baseball, those things might be kind of dull, but when you get to the real game, it benefits him, right? You guys are baseball players, right? Have you ever played with somebody who doesn't have a good understanding of the very basic foundation principles of baseball? Yeah? They don't know how to hit their cutoff man, or, you know, all those sort of things. If you can take care of those things when at the very, very beginning, then when you get in the game, which is the fun part, then you will have more fun, right? And everybody benefits. So hang with me through this, and I think you will find that it'll be, everything's going to be a lot easier once we get this knowledge under our belt. How many people have made their flashcards? Anybody? Oh, wow. I'm very sad. Okay? I want you guys to make your flashcards. You had all weekend to do it. Okay? Make the flashcards. Was I not strong enough in my emphasis last class period? I think I was pretty strong, okay? Next class period, we're going to have a quiz. Now, you guys at home can't take it. But all it's going to be is a list of accounts, and you have to tell me whether it's a debit or credit balance account. Now, remember, going to the PowerPoints, what does debit mean? Debit means left. Credit means right, okay? What do we mean by a debit and credit balance account? Remember, when I say know which accounts are debit balance accounts increase when you debit them, and thus they decrease when you credit them. A credit balance account increases when you credit it and decreases when you debit it. Okay? All accounts are both debited and credited at times. You just need to know whether the debit or credit is increasing or decreasing the account. Okay? It's key. Can't believe only that few people made your flashcards. You need to make your flashcards. Lauren.
I was looking at this,
yeah.
And it seems like a lot of the stuff that's pretty much good for you, like good for you personally and your business, is a debit. And I know this doesn't apply entirely, but like, and then all your expenses and stuff that you got to pay and all that is all credit. And then I don't understand how a withdrawal of money from your, like an owner's withdrawal is a debit.
Okay.
It does not add to your account. And so
well, let's remember a couple of things. Okay. I want to go to the second point on this PowerPoint. Do not mistakenly think of debits as good things and credits as bad things, or vice versa. Okay? Debit means left, credit means right. Now, that analogy falls apart real quick anyway, because cash is a debit balance account, right? That's a good thing. But isn't capital, the more capital you have in your company, isn't that also a good thing? And capital is a credit balance account. So get rid of that real quick. And I know where your brain's going, Lauren. Your brain naturally goes out there and tries to find something to hook itself to when you learn new information, something that it's familiar with from your past learning. Debit means left, credit means right, okay? And as far as your withdrawals, Lauren, we agree that capital is a credit balance account, right?
Yep.
Thus, you increase capital when you credit it, right? And you decrease it when you debit it. Now, withdrawals. Are withdrawals one of those things that increase or decrease capital? Withdrawals, think back to your first quiz, withdrawals decrease capital. So wouldn't it make sense that that is the opposite sign of capital? Okay? As withdrawals increase, they debit, which is the opposite sign of capital increasing. Okay? But once again, debit means left, credit means right. And I know there's a lot of, you haven't all suggested. Every now and then I get somebody raises their hand and they go, I learned a way to learn these, and it's a word you spell, or, a way you use your hand or something. That's all good and fine. But the best thing to do is be able to just see an account in isolation and know in a half second if it's a debit or a credit balance account. Does that make sense? Now, obviously, as you start to recognize things, you see that the asset accounts are all debit balance accounts. So you may see something like vehicle. Okay, well, that's an asset, so I know it's a debit balance account. Or you see taxes payable. Okay, I know that's a liability, so that's a credit balance account. It increases with a credit. You'll make those relationships, but don't try to read too much into them. Good question, though. Okay, any other comments or questions? Okay. All right. What I want to do then is jump right into the. Oh, one more. Let me show you one more slide. This is very important. I don't know if I've gone over this. Debit means left. Credit means right. Okay? One last time. Now, with that word of wisdom, let's go to our homework. Okay? And I think I assigned Quick Study 2.2, 2.3, 2.4, 2.5. Is that right? So let's go ahead. Let's actually start with 2.3. Okay? All right. Identify the normal balance for each of the following accounts. Again, when they ask you what is the normal balance, what are they're saying what causes it to increase? Okay? A debit or a credit. What is the normal balance of office supplies? Debit. Owner withdrawals? Debit. Fees earned. Fees earned is a revenue and is a credit balance account. Okay? And all of these would be eligible too for that quiz that you were talking about. Fees earned is a revenue account. It's a credit balance account. Wages expense. Wages expense. Debit. Cash. Debit. Prepaid insurance. Debit. Wages payable. Credit. Some of you had a good weekend, I can tell. Lots of fun. Make sure you guys do your homework, okay? You got to know this. I'd like everybody to be saying these in unison. And some people are kind of going, debit, credit, debit. Well, I'll just wait till somebody else says it. Building. Debit. Owner capital. Credit. Okay. All right. I will put up the answers again on these, but let's go ahead and go through 2.4. Quick Study 2.4. Now they're asking whether a debit or credit decreases the normal balance. So they're not asking the normal balance. Actually, it's going to be the opposite of what the normal balance is because they want to know what decreases it, correct? How do you decrease repair service revenue? You debit it. How do you decrease interest payable? Debit it. How do you decrease accounts receivable? You credit it. How do you decrease salaries expense? You credit it. How do you decrease owner's capital? Debit it. How do you decrease prepaid insurance? Credit it. How do you decrease buildings? Credit it. How do you decrease interest revenue? Debit it. How do you decrease owner's withdrawals? Credit it. How do you decrease unearned revenue? Debit it. How do you decrease AP, accounts payable? Yes, that's correct. Debit. And how do you decrease office supplies? You credit it. Okay? All right, let me put the answers to the first two that we just went over up there. All right? One thing I can predict is this. If you get out your homework, and I'll put the answers up while I'm saying this. If you get out your homework here in 2 weeks and get a blank piece of paper out, and if you try to do quick study 2.3, 2.4, 2.5, and you can't do it, or you're missing, even if you're just missing 15, 20% of them, if in 2 weeks, if you're missing those, then accounting is going not so well, okay? And you are on your way to a test grade that will make us all sad, okay? And I'm not trying to scare anybody. I just have taught this class so many times that I know if somebody doesn't get a very, very quick and firm understanding of this, again, it's like you trying to learn calculus and you haven't learned how to count. It just can't happen. It simply cannot happen. It's impossible. Okay? So I'm going to ask you how many did your flashcards next time, and I want to see all those hands up. Okay? All right. There are the answers to 2.3 and 2.4. Let's go ahead and go to 2.5. Okay? Now, I promise you I will have a test question like Quick Study 2.5. Okay? And we might even have a quiz on that as well. Okay, identify whether a debit or credit yields the indicated change for each of the following accounts. How do you increase land? You debit it. How do you decrease cash? You credit it. How do you increase utilities expense? You debit it. How do you increase fees earned? No, fees earned is a credit balance account. It's a revenue. So you credit it to increase it. How do you decrease unearned revenues? Debit it. Unearned revenue is a liability. It's a credit balance account. Thus, you credit it to increase it. You debit it to decrease it. How do you decrease prepaid insurance? Credit it. How do you increase notes payable? Credit it. How do you decrease AR, accounts receivable? Credit it. How do you increase owner's capital? Credit it. How do you increase store equipment? You store equipment is a debit balance account, thus you debit it to increase it. Okay? All right. Let me show the answers to 2.5. Okay? Can you see that? Looks like we kind of got that shadow on there again. So, all right, so there are the answers to 2.5 if you missed one. Okay. Let's go ahead and do 2.2 real quick. This is just identify the financial statement where each of the following items appears. Use I for income statement, E for statement of owner's equity, B for balance sheet. Okay, service fees earned is on the income statement. Okay, it's a revenue. Anything earned that says service fees earned or advertising revenue earned or whatever, that's a revenue account. So service fees earned is an income statement. Cash withdrawal by owner, owner's equity, statement of owner's equity. Office equipment is on the balance sheet. Accounts payable is also on the balance sheet. Cash is also on the balance sheet. Utilities expense, income statement. Office supplies, balance sheet. Prepaid rent, balance sheet. Unearned fees, that's a liability. Unearned fees, that's a liability, and it goes on the balance sheet. Okay? So the answers, if you need to see those again for that one, are up on the screen. Okay? All right, that pretty much takes us through our homework. Are there any questions about any of the homework? Okay? All right. Alrighty, let's go ahead and let me check my notes here. Okay. Let's go to the Elmo, because we're going to cover something else real important today. What we talked about is we talked about how we have been learning the chapter 1 way of doing things, correct? And the chapter 1 way, let's say the transaction we are analyzing, let's say we use $250 worth of cash to buy some office supplies. You with me? We use $250 of cash to buy office supplies. Or we buy office supplies at $250 for cash, however you want to say it. Okay? The chapter 1 way of doing that would look like this. We would put our account here, cash, and that goes down by $250. Correct? And then we have office supplies. And that goes up by $250. Correct? Right? Well, now what we can hopefully do with our newfound knowledge of debits and credits is, oh, thank you. Okay? Lauren noticed I didn't put a 0 on there. Okay? A gold star for Lauren. Whenever you catch me doing an error like that, don't just sit there shy. Do what Lauren did. Raise your hand and say, hey, you goofed up, because I make plenty of mistakes. The best thing about that is all the TV people at home will say, thank you, Lauren. Because if you wouldn't have told me till after class when the camera stopped rolling, everybody would be going, what in the Sam Hill? I don't understand that, okay? So whenever you see an error or potential error, shoot your hand up. So thank you, sir. Okay. So cash goes down by $250. Office supplies goes up by $250. You with me? Now, we have learned with our newfound knowledge of debits and credits the following. How do you decrease cash? Just like quick study, that last quick study we did, 2.5. How do you decrease cash? What do? We credit it. How do you increase office supplies? You debit it. Okay? So, if we go to our T accounts, for cash and for office supplies. And one thing maybe I've said, but I'm going to say it again. When I do T accounts, the left side's always the debit, the right side's always the credit. Debit, credit. I'm not going to keep writing D and debit and credit there, okay? It's always debit and credit. So just to save time and space, I don't keep writing debit and credit. Does that make sense? Okay. So we know we want to show a credit for cash, so we write that. This is called crediting the account, correct? Because I'm writing something on the credit side. And we need to debit office supplies. This is called debiting office supplies account for $250 because I'm writing something on the debit side. You with me? This is all review so far, correct? Now, one thing, however, I want to point out is that there really is an intermediate step between analyzing the transaction and putting these amounts into the T accounts. Okay? And that is making the journal entry. Now, have you heard of journal entries before? In accounting, you make journal entries. Okay? The journal entry is simply a notation, a way of recording transactions that tells us at a later time to go to the T accounts and post these things. Okay? Let me show you what a journal entry would look like for this transaction that we analyzed. Let me go ahead and write this down. I know there'll be some questions, but we'll answer those in the next few minutes. Okay? Okay. This in blue, that is called, let me write it down here, making the JE, or making the journal entry. Okay? This is called making the journal entry. And this is actually what we do before we do this. Okay? When we make the journal entry, we make journal entries as we analyze and record transactions. Okay? As we analyze and record transactions. And what this tells us is this, guys, that we need to go to the office supplies T account and put a $250 on the debit side, or more accurately, we need to debit office supplies for $250. We then need to go to the cash account and we need to credit it for $250, just like we've done down here. You with me? Now, what we have done down here is called posting to the T accounts, or we also call this the ledger. And the ledger is and you can look back from last lecture, the ledger is all the accounts and it shows their increases and decreases. So when you analyze a transaction, the first thing you do is post the journal entry, or make the journal entry. And then you post it to the T accounts or the ledger. And that's where you write it in the T accounts. Does this make sense? Let's go to the PowerPoints real quick. And I want to show you some basic things about journal entries. Okay, here is a journal entry. It looks slightly different than the one we wrote on the piece of paper. But let me point out some things in regards to it, okay? All right, first of all, you put the transaction date over there at the left. You put the transaction date, and that is important, okay? What date are you making this? So on December 1 of 07, C. Taylor had $30,000 worth of personal money that he put into his company. Cash goes up. It's debited. That's how you increase cash. Capital is also increased, and we increase capital with a credit. So that we put that transaction date on there. Then what we do is we put the title of the affected accounts and the dollar amounts of debits and credits. So this is saying you need to go to the cash T account and debit it for $30,000. You need to write $30,000 on the debit side. You need to go to C. Taylor Capital and credit it for $30,000. Put $30,000 on the credit side. You with me? Okay. Now, one thing they also have here is a transaction explanation. When we do these JEs in class, I don't require you to put your transaction explanation, and I usually won't do it either. Okay? Now, a couple important things about this journal entry. Let me get my pointer here. You list the accounts that are being debited first, and then you list the accounts that are being credited. Are you with me? Now, I did not say you list your debit balance accounts first and then your credit balance accounts. No, I said you list the accounts that are being debited first, and then you list the accounts that are being credited next. Okay? Going back to the PowerPoint, on the ones that are credited, what I want you to do we call indenting it, which I want you to scoot this over a little bit. Okay? Does that make sense? Don't put it here. Put it here. Scoot it over a little bit, okay? But this has the accounts that are being debited first. There's just one in this case. And then the accounts that are being credited. Cool? Now, this is important. Drum roll, please. The total of the debits and the total of the credits in a journal entry will always be equal. Now, in this case, it's pretty easy to see that because they're both 30,000. But we'll do some examples today. Well, it won't be as obvious, but it'll be very helpful to know that the total of your debits and must equal the total of your credits in each individual journal entry. You with me? Now, questions on this slide before I go off of it? Any questions off of this slide? Okay, going back to the Elmo. Now, I wrote this in kind of the abbreviated way. Okay? I didn't put the date because I didn't even have a date. But I listed the account that's being debited first. I listed the account that's being credited next. Right? Do the total debits equal the total credits? Yes. And a lot of times when I work these in class, I won't even put that little heading up there, D and C. I did this time. Okay? Here's some ways you could have written this journal entry that would have been incorrect. The most common one that is incorrect would be if you would have done this. No, don't do that. List the accounts that are being debited first and then the accounts that are being credited. You with me? Here's another way that you could have written this wrong. No. I want you to learn the right way at this point in your accounting career. So what I want you to do is I want you to scoot that over, okay? I want you to indent that. Indent the accounts that are being credited, okay? And then every now and then I'll get one that's just totally whacked. Like here's one I'll get every now and then. I don't know what's going on here. Okay? That indicates office supplies is being credited, but that says it's debited. This indicates cash is being debited, but this indicates it's being, that's just, okay? So the proper way to do that account there is right here. Does this make sense?
Is something that's debited always be before something, like, is there always going to be something debited before anything's credited?
Yes.
Okay.
Great question. Lauren asks, is there always going to be something debited before something credited? And the answer is yes. Here's why. The total of the debits always has to equal the total of the credits. So if you had no debits, it wouldn't equal. Does that make sense? So yes, you'll always have at least one account being debited. We're going to do an exercise here in the next couple minutes that I think will be very helpful. But let me say two real important things first. Going back to the Elmo. When you do this exercise, I would encourage you, if you need to go through the chapter one way. Do the chapter one way. Okay, like let's say we're analyzing, I bought office supplies at $250 using cash. Do the chapter one way. Then ask yourself, like Quick Study 2.5, how do you make cash decrease? How do you make office supplies increase? You credit it and you debit it respectively. And then you shift into the chapter 2 and beyond way, which is this way. I debit office supplies, I credit cash. Does that make sense? And then the next step then, and we're not always going to do this, but is if you post to the T accounts and ledger. One last thing let me say that's very important. People get these confused. Okay? People get these confused. Let's go back to the Elmo. If I ask you to make the journal entry, if I ask you to make some journal entries, I don't want to see a bunch of that. This is not making journal entries. This is posting to the T accounts or ledger. If I ask you to make journal entries, what I want to see is that, something like that. Very important. Because on the test, I guarantee I will ask you to make at least 8 or 9 journal entries. And I don't want to see a bunch of T accounts on a piece of paper. That's called posting to the T accounts or to the ledger. Does that make sense? If I ask you to make journal entries, it's going to be looking like that. You with me? Now, what I want to do now in class is we are going to do an exercise. I'll put it on the Elmo. This is in your blue book. It's called Mary's Gardening Services. And I want us to take some time. Probably will take at least 8 minutes. And I want to do these 5 journal entries. Okay? This is for the dates. These are the accounts being debited. Obviously, there's 3 of them in the first one. And this is for the account that's being credited. Remember, the total of the debits is always going to equal the total of the credits. If you have to do, guys, if you have to do that Chapter 1 way first, go ahead and do that to shift into the Chapter 2 way. Okay? So let's go ahead and do Mary's Gardening Service right now. Let's, you folks at home, pause this or listen to the wonderful JCCC music. Do this at home. We'll go over the answers here in about 8 minutes, okay? So we'll see you here in about 8 minutes. Okay, I want to make sure we get through these answers before the end of class. The nice thing about being at home watching these is if you're not quite done, you can just pause until you are done. Okay, but let's go through these. Okay, now I'm going to go ahead and do the Chapter 1 method as well as the Chapter 2 method. Okay, all right. On May 1st, Mary contributes $4,000 cash as well as a truck valued at $6,500 and equipment valued at $700 into her business. Okay, so what are the accounts affected? Well, we have cash. We have the account called truck. We have the account called equipment. And we have, this is one of those things that causes capital to increase, correct? Okay, so does cash go up or down? Goes up by $4,000. Does truck go up or down? Up by $6,500. What about equipment? By, and capital up by, what is that, 11.2? Okay, so how do you make cash increase? Just like Quick Study 2.5, you debit it. How do you make an asset like truck increase? You debit it. How do you make an asset like equipment increase? How do you make capital increase? Credit it. So, our journal entry, this occurred on May the 1st. We debit cash, truck, and equipment for $4,000, $6,500, and $700. Capital is credited for $11,200, isn't it? Now we don't put any dollar signs in this, by the way. Don't put dollar signs in. If you did, that's no big deal. But now here's the question: does the total debits equal the total credits? Yes, it sure does. So that in blue is the answer. What we did up here, Chapter 1 way, Chapter 2 and beyond way. Okay? Next one. On May the 4th, Mary buys some office supplies at Office Depot for $180 cash. So what are the accounts affected? Well, cash is affected and office supplies is affected. Does cash go up or down? Down by $180. Office supplies up by $180, right? How do you make cash decrease? How do you make office supplies increase? Debit it. Now we make our journal entry on May the 4th. We list the accounts that are being debited first and then the accounts being credited. The other thing that you never put into journal entries are plus and minus signs. No dollar signs, no plus and minus signs, okay? Okay, any questions on that second one? How are you guys doing on this? Good? Let's do the third one. Mine looks a little different because I left some space to do this other way. On May the 11th, Mary provides services worth $200 to a client, Bob Jones. The client immediately pays $125 in cash to Mary, but Bob will pay the remainder at a later time. Now remember, we're Mary, right? So what is affected here? Well, revenue is affected. Did we provide the services? So we provided all $200 worth of services. Cash is affected. How much did cash go up by? 125. Anything else affected? Accounts receivable, not payable, but receivable. We will receive this at a later date. And that went up by, okay? So let's do the journal entry on May the 11th. Oh, whoops, we skipped a step. How do you make cash increase? How do you make accounts receivable increase? How do you make revenue increase? Now we do the journal entry. And I'm not too picky. If you put AR before cash, that's all right. That's not a big deal. Do the total debits equal the total credits? Yes, they do. How's it feeling? Pretty good? Let's do the last two. On May the 12th, Mary purchases some office equipment for $5,000 by making a down payment of $500 cash and setting up a note payable for the remainder. So what are the accounts affected? Well, equipment, cash, and a liability called notes payable. We'll abbreviate that N/P. Okay, did cash go up or down, and by how much? Went down by 500. The equipment went up by, and what kind of liability did we establish? Went up by? Okay. Now, note that these do not cancel out. Some students incorrectly think if you add that across it should equal 0. And sometimes that works, but in this time it doesn't work, right? So don't think that that's some sort of shortcut or training method. How do you make cash decrease? How do you make equipment increase? How do you make notes payable increase? Okay, let's list the accounts that are going to be debited first. This is on 512. Equipment debited for $5,000. Now we list the accounts that will be credited. We can list those in either order. Cash is credited for $500. Notes payable is credited for $4,500. Okay? Do the total debits equal the total credits? Yes. There's not always the same number of debits and credits, is there? But the total numbers have to equal. One last one. On May 22nd, Bob Jones pays the remainder of the money that he owes us, that he owes Mary's company. So what accounts are affected? Cash is going to go up by, how much was that? And accounts receivable is going to do what? Was it 75 or 125? Thank you. So cash goes up by 75, is that what you said? And AR will do what? It'll go down by 75, correct? How do we make cash increase? How do we make AR decrease? Okay, let's do our journal entry on 522. The accounts that are being debited first, there's just one in this case. Cash for 75. Accounts being credited, we indent, shove that over. For 75. Okay? Is that going good? I think that's a good exercise to do. Okay? Now I'm going to assign you some homework. I want to remind you to use your work papers in the back of your book. I think this is the point where it really starts helping to use those work papers. Okay? To use those work papers. All right? What I want you to do for homework, now remember for you people here who are live, we're going to have a quiz right at the beginning of class in regards to the normal balances of an account, okay? But for everybody, the homework is right here. Quick Study 2.6 and 2.8, Exercise 2.1 and 2.4, all right? Good class period, guys. We will see you next time. See you later.